Hello and welcome back to Explain the Charts. Today, December 18th, we are going to be providing an in-depth analysis of USDJPY using the latest market information and technical analysis of the provided chart data. First, let's look at some of the current events and news affecting the USDJPY. Recent headlines indicate a hawkish stance from the U.S. Federal Reserve, despite a recent 25 BPS rate cut. This is in contrast to the Bank of Japan's expectation to remain accommodative. Many analysts suggest that the widening gap between U.S. and Japanese monetary policies continues to support the U.S. dollar against the Japanese yen. Traders are eagerly awaiting the U.S. inflation report, and a strong core print could be a potential catalyst for increased bond yields, putting upward pressure on the USDJPY. Now let's turn our attention to the charts. Starting with the daily chart, we see a clear upward trend in USDJPY over the past few months, with several significant highs and lows that could serve as potential support and resistance levels. We can identify key price levels to watch: the recent high around 154.668 and the lower support level around 145 for the longer term. The recent price action, however, suggests some consolidation or potential short-term reversal. Let's zoom in on the 1-hour chart to get a better understanding of the recent price action. The hourly chart shows a more volatile picture with several shorter-term trends, reversals, and potential consolidation periods. In this time frame, we can spot potential support and resistance within these ranges, highlighting opportunities for both long and short positions. The 15-minute chart reveals even more intraday price fluctuations, confirming the volatility we've already observed. We observe some potential short-term support and resistance levels on the 15-minute chart as well, providing finer-grained opportunities for traders. The correlation between the news and the chart data is quite evident. The recent rate cut by the Fed and the expectation of the BOJ to remain accommodative seem to be influencing the current upward trend. However, the price movements suggest a short-term consolidation or even reversal is possible. Let's focus on a specific period between October 25th and November 10th on the daily chart. During this period, we see a significant price rally, closely aligned with the news about the Fed's rate cut and the Bank of Japan's policies. This part of the chart shows the impact of the news on market sentiment and the subsequent price surge. This rally could suggest further short-term upward momentum for USDJPY. But we also see a sharp decline starting in November, which requires further analysis on the smaller timeframes. A strong U.S. inflation report could bolster the USDJPY's upward movement as traders anticipate increased bond yields. Alternatively, if the inflation report is weak, the price could drop. In summary, the key price levels to watch are the recent high near 154.668 and the longer-term support at 145. The likelihood of a short-term upward movement to 155 is moderate, 60%, contingent on a strong U.S. inflation report and continued divergence between U.S. and Japan's monetary policies. The probability of a decline to 145 in the longer term is assessed as low, 30%, in the absence of significant shifts in global economic conditions or unexpected policy changes by the Fed or BOJ. Keep an eye on upcoming economic data releases for potential catalysts, particularly the U.S. inflation report. Remember to always manage your risk and use appropriate risk management techniques when trading any financial instrument.